Hi and welcome to the channel. In this video, we go into the details of a deep dive on the breakout setup Qullamaggie style in biotech. The main goal of the study was to see how many setups are out there and is this industry any different when it comes to the breakout setup Qullamaggie style. Here are the open questions and topics that will be covered later. What is specific to biotech? What was the studied universe and how many setups were identified? What is the ADR in the breakouts and breakdowns dataset? What is the historical market cap when the setup happened? What causes a setup to fail? How much volume is present in the breakout area? What is the level of correlation with SPY? We'll also look at the Breakouts Map on Biotech ETF, so a map on XBI. We'll cover the Breakouts Map 3.0, adding biotech on the SPY ETF. And the final topic will be a chronological arrangement of the breakouts and breakdowns in biotech to see the Qullamaggie setup in action and what can be learned from this. Let's go. What is specific to biotech? Well, biotech stocks can experience major downturns if products under development fail trials or do not pass FDA approval, which can result in very big losses to the trading account. Let's go into a couple of examples. Before doing that though, I'd like to share a bit of details on the chart itself so that it's easier to read it through the presentation. What you'll see is on the left of the screen is the ticker under study in a daily time frame. On the right of the screen is the SPY ETF on the daily time frame. There is also a dotted vertical line which represents a day of an important event. So it's the breakout day, breakdown day, or in this case is the gap down day. On the bottom is the date. The same is highlighted on this SPY ETF. The moving averages are the 10 days, 20 days, 50 days, and 100 days moving averages. Let's go into a couple of situations when a negative trial result can create a major gap downs and failure of the position. So what we see here is a nice first leg, a good start of consolidation, but then a failed trial, minus 59% gap down. Another example with the nice first leg, good consolidation, a failed trial, minus 56% gap down. Another example, not a setup though, but nice momentum, a failed trial, minus 58% gap down. Nice momentum, not a setup, but a failed trial with minus 83% gap down. A decent momentum, nice surfing of the 20 days moving average, not a setup though, but a failed trial with a minus 74% gap down. Another example with a nice first leg momentum, a sideways start of good consolidation, but then a failed trial, minus 65% gap down. All these situations can generate major losses to their account and can be quite traumatic. However, there was a first good news while doing the deep dive. Less than 10 gap down situations happened within the Qullamaggie setup structure. So when the setup was actually forming itself in the studied timeline, which was a first good news and good sign that, well, these gap downs do happen in this industry. They are scary. However, there are not so many. And if I'll stick around the setup, the chances and the probability to get into one of these negative situations is relatively low. Clarifying a bit the aspects on gap downs, it led to the main question of the deep dive, which is how many Qullamaggie setups are in biotech and should I trade them? Well, let's start with the studied universe and how many setups were identified. There are 728 companies in biotech according to finviz.com. Out of them, 355 were selected for the deep dive based on a couple of criteria: price above $1 and average daily traded volume of more than 100k shares. The deep dive was made on the same timeline as the previous ones, January 2017 to December 2022. A fun fact about biotech industry, 90% of companies have a market cap below 2 billion as of June 2023, according to finviz.com. Something to think about in terms of price action and behavior of the setup. We'll get back to it a bit later in the presentation. How many setups were identified? A total of 130 breakouts and 133 breakdowns were identified during the deep dive. What were the selection criteria and what do all the breakouts and breakdowns in the dataset have in common? A 12% momentum or higher in the first leg, and of course a price above $1. a consolidation of at least 6 days, a breakout or breakdown daily volume of more than 100k shares. Because of this, 14 breakouts and 24 breakdowns were not included in the study, but they did happen, and a breakout or breakdown of more than 7.5% for all the setups that were identified. Another important element, all setups were collected no matter of the ADR. The goal was to see how many setups in the Qullamaggie style are formed, and then to process and make a conclusion about them at a later stage. So all the setups, no matter the ADR, were collected. Have in mind the study is biased. There is a selection bias. The study looks at setups that did a sharp move up or sharp move down. There are setups that continue to move sideways, but those were not included in this particular study. And there is a researcher bias. Some of the setups I selected you will not consider good setups. Here are the results for breakouts and breakdowns per year in biotech, and what you see right away is that there was a very high activity in this industry in 2020 with 41 breakouts, but also there was a major sell-off of 38 breakdowns in 2022. Overall, between 15 to 20 breakouts to me should be considered as a normal expectation from this particular industry. When we compare the number of breakouts with the main data sets and the data collected per sector, not per industry, but per sector, what we see is that if we consider for a 6 years time period, so a normal should be 90 to 120 breakouts, and that will mean that biotech industry is creating more breakouts than 6 other sectors on the market. So a good number of Qullamaggie setups in biotech. Here's the picture of the breakouts and breakdowns per year in the main data set, plus adding biotech highlighted with the dark blue color. Well, adding biotech is now even more evident how crazy 2020 and 2021 were in terms of momentum, breakouts, and market activity, and what back to normal means. And something to not forget, there is also a major number of setups that break down. Next question, what is the ADR in the breakouts and breakdowns dataset? The formula for ADR for both TC2000 and TradingView can be found on Christian's website. More details on the screen. On the chart itself, the indicator is plugged on top. It's the average daily range. The number you see here is actually the number where the dotted vertical line crosses with the yellow line, and the vertical line is highlighted as the breakout day. So this is the number of the breakout day. This number was collected for all the setups in the deep dive. This is the chart showing how the repartition in terms of breakouts and breakdowns, ADR for the main data set. And this is how the breakouts and breakdowns ADR in biotech looks like. What we can see is that the setups in biotech have a very high ADR. 88% of breakouts and 91% of breakdowns have an ADR of more than 4%. If we compare this with the main data sets, we see a very big difference, in particular also for the breakdowns. In addition to this, what the data suggests is that even if the ADR is high in biotech, there are also a lot of breakdowns happening. So here's the conclusion. Biotech setups have a much higher ADR than the setups in the main dataset. In biotech, a large number of setups with high ADR fail to break out. Here's a side-by-side comparison of the ADR in the main dataset and ADR in the biotech industry, and visually we can see that the percentage of stocks and setups with a high ADR in biotech is much higher, which leads to a couple of conclusions. The stocks in biotech have a more energetic price action. It's also maybe due to their market cap. They have also a sharp first leg up and wider consolidation. And once in breakout or in breakdown, the stock is expected to move fast. Something to think about, and an open question here: how does a high ADR impact your position size or stop loss percentage? Here's the next question. What is the historical market cap when the setup happened? The historical market cap was collected from TradingView. Here's an example. So in this case, we have a breakout. The dotted line is highlighting the breakout day. This is the day in particular, 12 November 2020. And in this day, the market cap is highlighted here on the bottom left of the chart. So in this particular example, 5.2 billion historical market cap when the setup happened. The information for all the breakouts and breakdowns were collected. And this is how the aggregated chart looks like. When reading it, on the vertical side of the chart, you see the number of the setups, and on the horizontal part is displayed the market cap in billions. What we can see is that 200 out of 263 setups in Biotech happened at historical market cap below 2 billion. That's another confirmation that the breakout setup are more likely to happen when the companies have a low market cap. Also have in mind that in general, we see that biotech is a micro cap or a low cap environment with 90% of companies having a market cap below 2 billion as of June 2023, according to finviz.com. A small wrap up on the breakouts Qullamaggie style in biotech based on the information we discussed so far. So what we saw is good amount of Qullamaggie setups in the biotech industry. There's a low market cap environment and setups have a very high ADR. The presentation you're watching now plus 4 more, in addition to the daily and intraday data on breakouts and breakdowns, plus the breakouts maps, plus an exercise and a chronological arrangement of breakouts and breakdowns are available for download on the link in the description. Big thank you to everyone who supported the channel. We move on with what causes a setup to fail in biotech. In this particular analysis, we looked at breakdowns, so the setups that had a first leg, then did a consolidation and did not go into a breakout, but step by step, the setup failed. So the analysis is mainly done on the 133 breakdowns. Here are the results. So the setup failed in 2.2% of the cases due to an unexpected negative news catalyst. In 9% of the cases, it's associated with an earning call that happened the day before or in pre-market in the day when the setup started to fail. Then 44.4% of the cases, there was a stock momentum loss, and in 44.4% of the cases, it's related to market pressure that adds pressure on the individual ticker. More details on how these calculations were done will be shared a bit later in the presentation. Let's go into a couple of examples, starting with unexpected negative news catalysts with 2.2% of the situations. Here they are. So an example where we have a first leg, nice start of consolidation, but then a failure due to an unexpected news catalyst. We saw this example at the beginning of the presentations, a nice start of consolidation and failure, nice start of good momentum, nice start of consolidation, a failure. Overall, negative news catalysts did happen within the Qullamaggie setup structure. However, not very often. The risk of news catalysts within the setup is manageable. In 9% of cases, the cause of failure of the setup was associated with an earning call. Here are the results overall for biotech when it comes to breakout and breakdowns. And here is the comparison with the main dataset. Let's look into a couple of examples. Here's a setup with a nice consolidation, then earnings happening and a loss of momentum. Here's another one, nice first leg, good consolidation, starting to show some weakness, earnings call and a loss of momentum. Then here it is, another one, nice first leg, good surfing of the 10 days moving average, but then earnings and loss of momentum right after earnings. Overall, a conclusion that was highlighted in the previous video as well, earning calls can be damage. Entering the setup a few days ahead of earnings can be a very bad idea, even in biotech. The next cause of failure of the setup was assigned to stock momentum loss for whatever reason. The analysis and calculation was done on my side based on a side-by-side comparison between the price action of the individual ticker and SPY comparison and overall market price action. Here are a couple of examples. So here's the setup, nice momentum, nice first leg, good consolidation, but then weakness and further move downward, even if the market continues more or less in an upward trend. Then another example of nice momentum and then weakness in the second half of consolidation. The market continues to move upward, but the stock is step by step losing momentum. Another example of nice momentum, nice surfing of the 10 days moving average, but then the stock fails to further move upwards. It loses momentum and step by step gets back, even if the overall market is moving upwards. So these situations when the stock is showing this momentum loss were assigned to the individual ticker, and we have 44.4% cases when this is happening. Another element of the setup related to momentum I looked into was to see if the setup had an attempt to break out, but then failed and continued as a breakdown, basically doing this element of price action. In the main data sets, in 21% of the cases, there was an attempt to break out before the breakdown. And when looking at Biotech, out of 133 breakdowns, 21.8% had the same type of behavior, very consistent between the two datasets. So no unusual behavior on Biotech confirms percentage of the main dataset that the setup has a consistent behavior on the breakdown side. Another question related to momentum was, did the setup regain momentum and cross the resistance line within 20 days after breakdown? So did the setup had a breakdown, found some support, and got back above the resistance line within 20 days? In 32% of situations in the main dataset, that was the case. And when it comes to Biotech, 20% of breakdowns did the similar price action. However, no unusual behavior, I think, confirmed percentage of the main data set. The setup has a consistent behavior on this. Again, it's nice to see. The last cause of failure of the setup, market pressure, in 44.4% of the cases, also calculated by doing a side-by-side comparison between the individual ticker price action and the market. Here are a couple of examples. A nice move upwards, but then the market turns and the setup does the same. A nice momentum, the market goes into a downward move, the ticker does the same. Here is another example of a downtrend move on the overall market and the individual ticker losing momentum and moving downwards as well. So examples of market pressure on the individual stocks in biotech. Here's an overall conclusion after looking at the causes of failure both in the main dataset and biotech. Biotech has the reputation to have a news catalyst-driven momentum. However, when it comes to setup cause of failure, the data suggests that there are no major differences compared to the main dataset for either the impact of news catalysts or earning calls. We move on to the next question: how much volume is present in the breakout area? The answer to this question was yes or no after reviewing the daily charts. Yes, meaning there is an unusually high daily volume in the breakout day. We see in the main data set it was the case in 67% of the cases. When we look at biotech, it was the case in 52% of situations, and the same analysis was done for the daily volume on breakdowns. And what we see is yes, in 25% of the cases we had unusually high volume, and no in 75% of the cases, very similar to the main data set. Here's a conclusion here: breakouts are more volume driven, 67% in the main data, in breakouts, in biotech in 52% of the cases, while breakdowns are fading step by step. Biotech volume behavior very close to the findings in the main data sets. What is the level of correlation with SPY? This question was answered by looking at what the SPY ETF did in the next 7 to 10 days after a breakout or a breakdown happened, and the answer could be the SPY moved upside, sideways, or downsides. Well, here are the results for the main data set displayed on top, and here are the results for breakouts in biotech. In 42% of the cases, when a breakout in biotech happened, the market was in upside move, slightly lower than what we see on the main data set. 43% of the cases, the market was moving sideways. When it comes to breakdowns, the data is surprisingly similar in terms of numbers, showing some consistency and some credibility on the main dataset as well. Biotech shows the same pattern as the main dataset when it comes to correlation with SPY. Is the 10 days moving average above 20 days moving average on SPY? Here are the results for breakouts in the main dataset and biotech, surprisingly similar. And then here are the results for breakdowns in the main dataset and biotech, again, very close to each other. Both the breakouts and breakdowns are more likely to happen in the bullish market environment when the 10 days MA is above 20 days MA on the SPY ETF. Here's a breakout map 3.0, adding biotech to the main dataset of 11 sectors with both breakouts and breakdowns. Here's how to read this chart in more details. Every slide contains 1 year of price action on the SPY ETF with the 10 days, 20, 50, and 100 days moving averages. Every time you see an arrow up, that's a breakout. Every time you see an arrow down, it's a breakdown. An arrow with a circle on top, that's a breakout with an earnings in the same day. In this case, we see a breakdown with an earning call in post-market the day before or in the same day. All the arrows are color coding and you see the answer here. Healthcare is orange, and when it comes to biotech, we have the arrows orange with an outline in blue. I highly advise you to pause and review the chart in details every time it's needed. I'll just move on with comments to each year. Here are the observations based on the breakouts and breakdowns map. For 2017, breakouts and breakdowns happen randomly, as we can see here, or in clusters, as we can see here or here. 2018 data, I let you pause if needed. On my side, biotech, very similar behavior to other stocks, not many setups during market corrections, as we can see in this area. 2019 map, here biotech, nothing unusual in terms of correlation with SPY. 2020 map, major activity in biotech in 2020 with way more breakouts than breakdowns. We know that there was a high seasonality in 2020 and a lot of setups across the year. 2021 data, well-defined cluster areas in biotech. We can see that here. We can see that here. We can see that in the first part of the slides as well. 2022 major sell-off in biotech. It's very visible now on the map, and we see the intensity of it and how many clusters are there. We can see it here. We can see it here. We see it here, here. Major sell-off. That was it in terms of breakouts map. I highly advise you to pause and review them in more details. On my side, as a conclusion, biotech did not display an out of ordinary behavior compared to the main dataset when mapped on SPY. Within the study timeline 6 years, there is a high industry seasonality with more breakouts in 2020 and big sell-off in 2022. The study indirectly confirms the importance of industry momentum within a specific time frame. Here's the breakouts map on SPY Biotech ETF XBI. Each slide contains 2 years of daily price action on the particular ETF. Both breakouts and breakdowns are displayed. The 10, 20, 50, and 100 moving averages are also on the charts. What we see based on this, and I let you pause and review the slides in more details. On my side, even representation of setups across 2017, 2018, which resulted in both breakouts and breakdowns. Uptrend momentum most of the time within this time frame. By this I mean that even there was a choppy move, sometimes the move is still and the price action is still in an uptrend, which may be the cause and led to generating more setups in general. No setups during major market correction. We see that here, no setups at all. Almost. Next, 2019-2020 breakouts map. Nice number of breakouts and breakdowns. Overall, a lot of setups. Nice to see. The Qullamaggie setup happening again and again. The momentum of 2020 very well defined on the SPY ETF, meaning this part of momentum and the upward move was very well defined. A lot of setups happening in this period of time. However, just remark here as well, the market is moving sideways, but look how many setups are breaking out or breaking down in this period as well. So interesting to see. Then here's the last part, 2021 and 2022 map on the Biotech ETF. I let you review in details. Here are my comments. High number of selling cluster within the 2021-2022 timeframe. On this map in particular, you can see the major sell-off that happened in 2022. It started end of 2021, then more here, then a massive sell-off here, and continued also later in the year. You also can see based on the volume of the ETF itself that from the end of 2021, we have a higher number of transactions in this industry. A small observation on my side while reviewing the ETF map, it's quite difficult to see the selling clusters based on ETF trends, and assuming that you don't see the right side of the chart, when you look here in this area, you see a nice price action and then maybe a reverse and a small consolidation. But based on this, you will not see what's coming later. Similar situation here. It's okay, it's a nice consolidation, it's a sideways move, but then you couldn't predict much based on the ETF and what an amount of selling is happening moving forward. That's why a conclusion on my side while looking at the ETF map, price action within the setup is a prime indicator. One of the last topics of the presentation, a chronological arrangement of breakouts and breakdowns as a blend as they happen in time. The goal of the exercise was to arrange all the biotech setups in time so that by looking and reviewing them as they happen, to get a better understanding in terms of the structure, the patterns, how they behave, and get more clues on what the setup is more likely to do. Is it about to break out or is it about to break down? So we'll see, in a sense, the Qullamaggie setup in action. All the dataset for biotech is arranged and available for download. For this particular presentation, we'll take just a crop of that dataset to look into it super quick. We will cover the breakouts and breakdowns in biotech from here. So from here all this way to this one. Let's review first the price action on SPY so that we know what's ahead. There was an uptrend move, then a small correction, another uptrend move, then a massive correction followed by an uptrend move. We start with a nice setup with the breakouts, then a nice momentum followed by a breakdown, even if SPY is moving upwards. Nice momentum with a breakdown with the good synchronization with SPY, then followed by a breakout, a nice breakout, then a setup with the choppy consolidation, maybe also impacted by the overall market sentiment, and the breakout. Then we have a change of sentiment where at the top a correction is ahead, the setup is already showing some weakness, and there was a breakdown, a market correction, another setup, significant momentum, but then the weakness and the setup in a breakdown. Then here we have a breakout happening within the next couple of weeks, and we see a massive correction on the overall market in the next couple of weeks. So a breakout triggered by the positive news catalyst, another a breakout triggered by a very turbulent price action, and overall a breakout even if the market is about to go into market correction. Another setup, nice momentum, the market going into correction, the setup is following. Another one in the same day, I think. So nice momentum, then market correction, setup correction, nice setup, consolidation, market goes through correction, takes the setup with him, and then after all the massive correction on the market, we see the last setup under the review, a setup that goes with nice momentum, choppy consolidation, but then a nice breakout later. Seeing all these breakouts and breakdowns in time as they follow, here's a conclusion on my side. The outcomes of the Qullamaggie setup are impacted by many factors, catalysts, earnings, overall markets, and so on and so on. The setup requires a case-by-case active setup management. I think the keyword will be case-by-case. We saw in a short time frame happening breakouts and breakdowns, news catalysts that help add momentum to the setup and lead to a breakout. That was one of the conclusions after reviewing the datasets in a chronological arrangement. A small stop on the Breakouts Qullamaggie style setup overview. It's still work in progress. The data is step by step adding up while doing the deep dives. And following this deep dive on a narrow industry, in particular biotech, it was very interesting to highlight the difference in ADR in the main dataset and in biotech. That's why this element is also added to the overview as being very important to have in mind when trading the setup. And a small final wrap-up of the presentation. The study, when narrowed to an industry, confirmed findings of the previous deep dives when it comes to volume, 10 MA above 20, cause of failure correlation with SPY. Biotech industry has many Qullamaggie setups and good opportunity for profit. The industry has a lot of low market cap stocks with energetic price action, setups with high ADR, and sharp breakouts and breakdowns. Biotech requires a high level of breakout setup trading skills due to its volatile price action. And important, biotech requires a good risk cushion. You should be able to afford unusually high losses for a couple of times in a row and still be able to move on. Otherwise, not advised to trade biotech at the beginning. Thank you for your attention. Please share the link of the presentation on Twitter if you found it useful. Best of luck. Peace.